Today, I would like to give you the opportunity to earn an honorary small business MBA. And the way that I'm going to do that is I'm going to introduce to you a little theory. We call it the 3 M's. And it's a way of looking at small businesses, and in particular looking at small business startups. The 3 M's are the 3 critical success factors really for all businesses. I have a master's degree in business administration from the University of Kansas, which they tell me is a pretty good school. And we did a lot of casework in my MBA. And so every time we would discuss, we'd read a business case, we'd close up the texts, and the professors would say, okay, let's talk about the 3 M's. Now, don't get too nervous here. If you happen to feel like you're lacking in one of these 3 areas, it's not the case that you can't be successful if one of the 3 M's doesn't line up very well with the others. The theory is just that, hey, if all 3 critical success factors line up really well, you have a lot of opportunity to be successful in your business. If you have some opportunities in one area, at least this gives you a chance to focus and make the kinds of changes that you might need to make in your business or in your vision for this business. So the 3 critical success factors, or the 3 M's, are quite simply management, market, and money. And what do we mean by that? Basically, management. Do you have the ability to run this small business, or can you put together a team that can run it? Market. Are there people who are willing to pay for your product or service? Will they pay a price that will allow you to make enough of a profit to stay in business? And then money. Do you have the required startup capital that you'll need for this small business? How many dollars will it take to get you from here to the day that you open the doors for this small business? $100,000, $200,000, $20,000? And do you have that money, or do you have access to that money, whether it's through loans or investors or any other number of ways that you might get the capital to start a small business? In the next sections, we're going to take a little bit closer look at each one of these 3 critical success factors. While I'm thinking about it, I'm going to go ahead and give you the whole entire rest of my MBA today. Have you ever heard of the Rule of 72? The Rule of 72 is an expression that governs the time value of money. This is a little bit off track for today's topic of small business startup, but while I'm giving you an honorary small business MBA, I think the Rule of 72 is an important thing to throw in there. If you take any given interest rate and you divide that number by 72, it tells you how many years an investment would take to double at that interest rate. So if you're earning a 4% rate of return, and 72 divided by 4 is 18, it would take 18 years for your $10,000 investment to turn into $20,000. Conversely, if you're paying 18% interest on a credit card, 72 divided by 18 is just 4. So if you let that $10,000 worth of credit card debt sit there for 4 years without making any payments, it would double into $20,000 of credit card debt. Pretty powerful, the Rule of 72. So if you think about the Rule of 72 and the 3 M's, the 3 critical success factors, if you can understand that stuff, I hereby award you an honorary small business MBA for the time that you took to watch this video today. In the next section, we will be diving into the 3 M's, and we'll be discussing management.